3 surprising ways that whole life insurance is going to help you 12 years from now. The market's going to be worth a lot less than it is today. This is one of the areas that you need to understand. Where are the values? What are the biggest concerns that you have going on? Why do I need the emergency fund? If you have it designed the proper way, there's more flexibility in whole life insurance than most people realize. There is no one right design. It's got to be designed for you. There is a real value to having control of the banking function in your life and have control of your medical directives. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we're talking about the 3 surprising benefits that whole life insurance provides to its policyholders. Now, I know that most people that think about life insurance think about it in terms of the death benefit. And while the death benefit is absolutely extremely valuable and provides a backstop to your wealth creation, right? Like, I think one of the things that is wildly misunderstood about life insurance and whole life insurance, and even the way that index universal life, even though I'm not a proponent of index universal life, one of the ways that I think cash value life insurance as a whole is being mismarketed and misrepresented online is that people are saying that whole life insurance is this secret tool the wealthy use to create wealth. And the truth is it's not the case at all. The wealthy create wealth outside of their life insurance policies, and they utilize their life insurance policies as a backstop to their wealth, right? As a backstop to protect their wealth creation, as a foundational asset to make sure that what they're trying to create is actually executed on, is actually guaranteed, and is actually going to allow and make sure that no matter what you do in your life, it's going to be completed, right? Like if I say right now that I want to create a certain result in my life, then I need to go work for it. The life insurance policy is just there to make sure that I know I can guarantee a specific result, right? Because if I'm trying to build my business and I want my business to be worth, let's just say $10 million. Well, if I have a financial strategy that's there, and then I have a life insurance policy that is worth $10 million, now if I'm not able to accomplish my goals and objectives for my family and for my heirs and for everything that I want to accomplish in this life, even if my company is worth, say, $4 million, right? I have this policy that I can guarantee a result and say have that $10 million because I'm not building my companies just for me. Yeah, I love it. I'm having fun. I love the gamification and the impact that we have with everything that we do. But at the end of the day, I'm not just doing it for me. I'm doing it for the next generations to come. And so I need to be thinking long-term in that perspective. That's one of the reasons that it really drives me crazy about the people that just say buy term and invest the difference because you don't need life insurance long term. It's not a matter of me needing life insurance. It's a matter of me wanting to create a specific result in my life and making sure that my money and my financial tools that I'm using are in alignment with what I say I'm wanting to accomplish in my life. And that's what this is all about. So let's dive into now 3 surprising ways that whole life insurance is going to help you in the areas that I just described. So the first way is that whole life insurance provides you what's called accelerated benefit riders, meaning it's going to give you living benefits and access to the death benefit while you're alive. A lot of people think about life insurance being death benefit, like I said, which is a great value, but life insurance can also be a tool that is going to help you stay alive. I use the story of my father-in-law all the time. We utilized acceleration of his death benefit to be able to keep him alive and be able to pay for alternative medical treatments that insurance wouldn't cover. His pancreatic cancer, they give him 3 months to live. 4 years later, he's still alive. He's actually down here with me right now in the Dominican Republic, visiting his grandkids and spending time in a way that if he followed traditional medicine and got the chemo and radiation, he'd be gone by now. Almost certainly he would be gone. And so to be able to have control of your medical directive and be able to utilize the death benefit for alternative treatments and have access to that money tax-free to be able to utilize in the ways that we can help make our medical decisions in a way that isn't leaning on or dependent on what the traditional health cartel, I will say, will tell us that we need to do. I think there's a lot of value in that. So one way or the other, whether you become critically, chronically, or terminally ill, this is going to impact what company that you choose to go with, because not every company is going to allow you to do this. Some companies have just terminal illness riders, meaning they'll accelerate your death benefit if you are diagnosed with, like say, a terminal cancer. Some have critical riders. If you get a heart attack, if you have diabetes or anything of that nature, you can accelerate your death benefit with a diagnosis that falls in line with that. This is one of the areas that you need to understand. Where are the values? One of the things I say to people all the time is you need to align your money with your values and beliefs. What are the biggest concerns that you have going on? What are your values? Do you value having that control of your medical directive? How important is you? And this is going to vary based on individual, how important it is to have control of that critical care. Maybe heart attacks run in your family. Maybe diabetes runs in your family. Maybe you're concerned about that. Maybe you just want to have control and you're not sure what the future holds for you, but you want to make sure that you have options, and that you're, at the end of the day, you're in control of the results. And so as we're building businesses, and I'm always thinking as an entrepreneur here, like as we're building businesses or as you're building a real estate portfolio or whatever it is, at the end of the day, it's all business, right? As you're doing that, I really challenge you to think about, like, what are the key parts that you are the kind of the linchpin in the success of that business, right? And if you getting unhealthy, if you having health issues or whatever ends up derailing the success of all that, I really challenge you to think about what you need to have in your financial structure, what financial products you need that are going to insulate and protect your family from that. And whole life insurance is going to give you a benefit in a way, in this capacity, that no other product in the world is going to be able to do. Now, the second benefit is that life insurance is a true emergency fund. A lot of people will tell you that you should have your emergency fund in a savings account, maybe a high yield savings account, something of that nature. People will say you need anywhere from 6 months to a year to 2 years of emergency savings or lifestyle expenses in an emergency savings fund. My mindset behind all this is I want to go back to why. Why do I need the emergency fund? Emergency funds, typically speaking, are talked about through the lens of, what if I lose my job? I don't know about you, but for me, losing my job is not really an emergency. I need to be prepared for sure, but that's not really the emergency that I want to be prepared for. I want, when I look at an emergency fund, to be thinking about what's going on in the economy. Are there real, true financial catastrophes in the economy? Think Great Recession, think real bad economic landscapes. I just did a video with John Wolfenberger talking about the fact that there's a real risk that the financial markets 12 years from now are going to be worth less than they are today. This goes back to the Great Depression kind of era where, the crash in 1929, it took till the mid 1950s to get back to even, right? Like, we are in economic environments that we have never seen. Valuations of companies, Warren Buffett's favorite metric for investment, is showing an indication that it's over 90% likelihood that 12 years from now, the market's going to be worth a lot less than it is today. And so when we look at these numbers and when we think about what's going on, we have to be thinking about what is an actual financial emergency. Other financial emergencies I look at are you and your health. I just talked about the living benefits. What happens if you become critically, chronically, or terminally ill? That is an emergency that maybe makes it so you're not just laid off or you lose your job. What if you're just not able to work? What if you have all these things that are going on? Having an acceleration of the death benefit can be a huge factor to not just control your medical directive like we just talked about before, but utilize that money for lifestyle, utilize that money for reinvestment, utilize that money to protect your business, utilize that money actually to help you solve that need. Because if you become in a situation where you become sick and you're not able to work anymore, being able to accelerate that death benefit can be a huge factor in your emergency fund. And to me, an emergency fund needs to be thinking about what are all of the different things that could be happening in the economy, in your personal life, and your personal health. And those are the things that we need to be prepared for. You losing your job and having 6 months of income, it's not really a pure emergency fund. Now, the people that would go against this and say, why would I save money in a whole life insurance policy for my emergency fund? Because when I have an emergency, if things get tough and I lose my job, I don't want something that's going to force me to keep paying a premium, right? And I get how they're concerned about that. But the bottom line is, if you have it designed the proper way, there's more flexibility in whole life insurance than most people realize. There are ways that you can cover the premium with using a premium offset feature by taking partial withdrawals and surrenders from the policy to make sure it's paid. And ultimately ways that you can make it so the flexibility of the premium, let's say you have a $20,000 annual premium, there are ways to make it so you can only pay, say, $2,100 a year instead of $20,000. So it could be a tenth of what the premium was required to keep the policy in force, and you still retain all the other benefits that we're talking about. So it really is, there is no one right design. It's got to be designed for you, but having an emergency fund, like a pure emergency fund, is actually a surprising benefit that most people don't realize comes with a properly designed whole life insurance policy. Now, the third way that people receive kind of a benefit that is super surprising from a whole life insurance policy actually comes in the form of a reduction of cost of capital. Now, this is a bit more of a kind of a second level way of thinking. Most people look at life insurance and they go, oh, it's not gonna get me a great return. It's not gonna get me, why? Well, let me say it this way. Why would I put money into a whole life insurance policy that's gonna earn me 4 to 4.5% net after fees, tax-free, when I could go get 8% in the stock market? Well, I've done other videos in the past that have talked about the fact that your 8% expectation from a long-term perspective isn't really realistic. And I've got a lot of videos that show why if you wanna go check them out. But beyond that, what I would say is, for people that are real estate investors, for entrepreneurs, people of that nature, there is a real value to having control of the banking function in your life and being able to control the cost of capital of things that we spend our money on. Think major capital equipment for your business. Think the cars that you buy. Think about real estate loans. I'm going to use one really clean example right now just to give you an example. Now, I have my money in a whole life insurance policy. And let's say I have $250,000 inside of my life insurance policy, and I need to go and I'm looking and I find a good value on a real estate property. And I go and I buy that real estate property, and my options are I either need to put $100,000 down on that property for a down payment, and then if I pay for that down payment at, let's say I pay cash for it, well, then I lose control of that money. There's an opportunity cost. I give up control of that $100,000, right? Because if I could earn 4.5% to 5%, then even though I paid cash, I'm just not a big believer in keeping my net worth inside of my houses because it's harder to get it out of it, right? And so what I want to do is I want to utilize a policy loan from the whole life insurance policy. And the reason I think this is so important, and the reason I think it's so valuable when you look at the full spectrum view, is because the cost of borrowing inside of a whole life insurance policy is much cheaper. And so just using even one of the most secure investments that we can look at, and some of the most secured loans that we're going to be able to get right now, say 7.5% for an investment loan with a 20% down, which is a really good rate at this point in time. When I look at that, I could go pay 7.5% on that with a mortgage company, with a bank, or I could go to my whole life insurance policy and I could get 5.5% simple interest at this very moment in time. So what is the value of being able to have the cheaper cost of capital? It's really high. And this isn't something that you're going to be able to see on an illustration. It's not something you're going to be able to see on a spreadsheet, because it's the intangible things. The value of the policy has more to do with how you utilize it, how you leverage it. You can create value in your life simply by having this asset, simply by having your financial structure set up in a way that enables you to take this value to the next level. It helps you increase your financial efficiency by reducing your cost of capital on these assets like real estate, right? So if I could do that, well, we know that there's a real value to that. We know if I can borrow, let's just use a real extreme example. Let's say I had an opportunity to buy a $250,000 house. I could go buy that $250,000 rental property. Let's say I was able to get a mortgage for 100% of it, which you couldn't even do at 7.5%. Well, if I could borrow against my policy at 5.5%, and the going rate is 7.5% in the real estate market, that's a huge extra value for me from a cash flow perspective to be able to create more value in my life. Not only am I able to do that at 5.5% instead of 7.5%, but now when I take that $250,000 and I take a loan and I buy the property with it, I'm paying that 5.5% simple interest back to the bank, but all the while my money is going to be growing at a compounding rate based on the fact that it's still going to grow inside of the policy because I'm not ever taking my own money out of the policy. I'm literally just collateralizing that amount, and they're guaranteeing the loan that the insurance company is going to give me. They're guaranteeing that loan with the death benefit. So if I take a $250,000 loan against the $250,000 cash value that I have, that $250,000 of cash value is still going to grow. They're going to give me let's say 5%, and that $250,000 of a loan that I'm going to pay 5.5% on, that's there. It's going to collateralize against that amount, and it's going to guarantee it with the death benefit. So I need to make sure I'm using the cash flow from this investment property to recapitalize this account. And as I do, the money will become reliquefied, and I'll be able to utilize it for other investments in the future. And I never interrupt the growth. And I've got other videos that show how this works. It's amazing. I did this video called Infinite Banking Simplified that kind of shows how this works and the power of it. And this is what I call financial efficiency. When we do this, it helps us create more money with the same cash flow, with the same assets that we're buying, simply by flowing the money differently and utilizing these different assets to accomplish the same goals and to do the same strategies that we were doing before. Simply by changing where our money is flowing through, it's going to help us create more wealth in the long run. Now, full transparency, you got to look at this from a long-term perspective. But this one strategy, this one thing is going to be a game changer. Understanding that this benefit of reducing the cost of capital and knowing how to leverage it and becoming who you need to be to understand when and where and how to leverage it is going to be the key to your success on you creating more wealth with less risk without having a negative impact on your lifestyle. So those are the three things. I think understanding your medical directive and what it does is something that most people, when they think about life insurance, don't think about. Understanding that it is a true emergency fund to protect you in all life's emergencies and real economic scenarios that impact you specifically. And then understanding that on the other side of it, it's going to reduce your cost of capital in a lot of scenarios. It's going to give you more control and help you achieve better results with the same flow simply by changing one little thing, which is the asset that you flow that money through. And you don't have to change anything else in life. Those three things combined, to me, are the main reasons that I love whole life insurance, and I think it's like one of the most powerful financial assets in the world. Now, full transparency, if you are in a situation where your cash flow is really bad and you're upside down, you got a lot of toxic debt, maybe it's not the right time for you yet, but if you're interested in having a conversation to see if it is the right time or what you can do preemptively before it's the right time to help accelerate your debt pay down, clean up your debt, increase your cash flow, get your financial house in order, no matter where you are on the spectrum of that, whether you feel like you're ready to go and you got a bunch of money sitting on the sideline and good cash flow, or you're in debt and you need to clean that up before getting things right, go down to the link in the description below. There's also a link in the comment section. You could just go check that out. That's pinned the top comment. You can set up a call with one of the Life 180 agents and reps that is like designed to be able to help you work through this. They're pros at helping you work through whatever scenario it is, because the goal is to help you have complete clarity about your situation before you make a decision. I'm a big believer nobody should do anything they don't understand. Nobody should invest or put their money into any asset they're not completely clear about how it's going to work in their life. So it really is an education process designed to give you clarity about your scenario and a path forward. So that is it. Hopefully you found value in this. If you did, please like the video, share it, get it out there to people. Until next time, have a blessed, inspirational day. We'll talk soon.